Okay, so I think we've got the last couple of people online now, so we'll make a start. So first, just a little disclaimer about this. Making Tax Digital, it was in the Draft Finance Act in 2017. The Finance Act was sort of chopped down. Basically, most of it was taken out before the general election. You can't have an open Finance Act. So what we're talking about now isn't law at the minute. There may still be changes to it. It may be cancelled altogether. But the most likely scenario is that it will go ahead with the dates that have been previously advised and as it's been previously advised by the government. But just something to bear in mind. So what is Making Tax Digital? So initially it was billed as Making Tax Easier by HMRC. They're to drop that bit, but the idea is that HMRC think there's a big tax gap within tax. They think that tax is underpaid to the tune of about £8 billion. So Making Tax Digital is their idea of bringing everyone's records into a digital environment to make sure that more people pay the right amount of tax. Initially, it was brought in line with quarterly payments as well. That idea was dropped again, but only dropped for this Parliament, which has now been dissolved. So depending on what happens tomorrow, quarterly payments may be back, we don't know, but the idea behind it, just as it stands at the minute, is that it will be 4 quarterly updates submitted to HMRC once a quarter, but no quarterly payments to go along with it. So there's, so what we're talking about now is it's not law. It's still being formulated at the minute, which is something that will most certainly come into force. The thinking behind it is HMRC think people make mistakes in their record keeping. The idea is that by bringing everything into a digital age, people will make fewer mistakes. By having to do returns every quarter, people will have more accurate data, sales won't be forgotten about, receipts won't be lost. So hopefully the idea is that people pay the right amount of tax and fewer people get sort of large penalties. Again, going back to the Making Tax Easier idea they first came up with, the idea is that everyone will have their own personal tax account. The personal tax account will hold all their information about their self-employment, employment, bank interest, dividends, NI records, state pension entitlements. And so the theory behind it is sort of well planned. In reality, it's causing a little bit of extra hassle for clients, but hopefully here to show you that we can guide you through things, and it's not as bad as it seems. Yeah, so the key requirements are that records have to be kept digitally. So spreadsheets can be used, but they're only with a bit of middleware software. The middleware software can be sort of quite clunky and has to be sort of bespoke. So in reality, spreadsheets, although they say that can be used, are not really going to be that useful. It's going to result in 4 submissions each quarter, one each quarter to HMRC, and that's per trade. So people with a sole trade and a rental property will have 4 lots of submissions for each, so that's 8 submissions. We'll then have one end of period submission, which brings all the information together, any accounting adjustments, so things like capital allowances, they'll be put on the end of period submission. And then one final submission, which is the final submission, which is essentially the tax return, but not the tax return, which they've got rid of. Again, that just draws a line under all the information, and that's the bit where you're declaring that all the information you've provided is true and fair. Again, just like the tax return. In terms of timescales, the 4 quarterly updates have to be submitted within a month of the quarter end. So, for example, if we're a business starting on the 6th of April, first quarter will be to the 5th of July, and that will be due to be submitted by the 5th of August. The end of period submission has a deadline of 10 months after the period end. So again, in line with the standard tax returns at 31st of January, and the same with the final submission, that's again 10 months after the year end. So essentially what will probably happen is the draft quarterly submissions will be submitted, any adjustments will be made in the end of period submission, and then finalised with the final submission. So like I'm saying, with different streams of income, there's different submissions that have to be made. So I'll get back to the example of the client with the self-employment income and the renter's property. There'll be 4 quarterly submissions for each. There'll be 1 end of period statement for each and 1 final submission. So that client, rather than having 1 tax return, will have 11 submissions to HMRC. So in terms of timescales, again, these are on the draft legislation. The idea is that Making Tax Digital applies for every person with income over £10,000. So that's self-employment turnover over £10,000, rental property income over £10,000. There's been a slight delay on that. There's an optional opt-out period now, so people who are under the VAT threshold, so with turnover under £85,000, can now defer for 1 year till the 6th of April 2019. But yes, essentially any VAT-registered sole trader will be reporting digitally from the 6th of April 2018. Following that, VAT goes digital from 6th of April 2019, and limited companies corporation tax from 6th of April 2020. And it applies to the first tax which you become eligible for. So a VAT-registered limited company would still have to report digitally from 6th of April 2019, even though they don't apply for corporation tax from 2020. Again, these thresholds are based on the previous 12 months. So a previous 12-month turnover for the period before the 6th of April 2018, if the turnover is over £85,000 for that period, that's when they become eligible for Making Tax Digital. So with anything that HMRC do, there are penalties involved. So the penalty models are still being sort of considered and ratified at the minute. There are 3 models they're looking at. The most likely is along similar lines to the VAT surcharges, so a staged penalty for lateness and inaccuracy. The downside is these are based going on for a 2-year period, rather than say with VAT where you've got a 12-month period to put things right. If you're late, considerably late with Making Tax Digital, you'll need to have things right for 2 years afterwards in order to get out of the penalty regime. So things to take into consideration. So like I say, everything is going to be based on software. Most software out there is going to be a pretty similar model. It's going to be cloud-based. There's going to be a monthly subscription, and there's various softwares out there, all pretty similar, all being developed all the time. These software companies are throwing huge resources at making compatible software. And there's new software coming to the market all the time. But again, this is something we can help you with, push you along in the right direction, and help give any advice on any questions you've got there. The other good thing as well is that these can be combined with receipt scanning apps and software. Just have some water. Yeah, so with these, the idea is that you can scan in your fuel receipt, say, it will post straight to the accounting software. You can then throw the receipt away. These receipts are then kept for 7 years along with the HMRC regulations, and it basically gives you option of a paperless office. There's various advantages with this. So it picks all the figures out for you, so there's less manual work that needs doing. It keeps all the records for the correct timescales. It means that if there's a HMRC inquiry ever, they're stored in an approved format. You've not got any issues with lost receipts, expenses rubbing out or anything like that. So we found that these work pretty well, and again, these are developed alongside Making Tax Digital compliant software. So like I was saying, there's various software available. We use Sage 1 in the office for a lot of our clients, and they found that's really working quite well. But like I say, with most of these software, they're being developed and updated all the time. There's plenty of other softwares out there, all working along a similar model. a monthly subscription, and all online, all cloud-based. Most of them are compatible with Android and Apple mobile phones as well. So most of the time you can simply just work from your mobile phone, tap out an invoice on your phone, record an expense, and do things from there. So there's plenty of, we use Sage 1 at the office. Xero are quite a big, popular brand at the minute, and they're really pushing things, and it's quite a user-friendly brand. There's also things like KeyTime, Cashflow, Free Agent, QuickBooks. So the whole market of different software out there. One thing you do have to bear in mind is that the software has to be designed to interact with HMRC's API. So this is like a door into HMRC's software. So again, if your software doesn't open the key to the door, then it can't submit the returns. But I say the software that's out there that I've mentioned is all HMRC ready and it's good to go. Yeah, but let's say it's obviously big changes to the tax system, but hopefully it's not something that needs to cause a great deal of panic. What we've found so far is that clients who have sort of got ready beforehand, they're finding it as an opportunity rather than a threat to their business. Obviously, with regular updates, you know exactly how your business is doing. It's much easier then to make correct decisions based on staff, new machinery, anything like that to make those decisions, because you've got more accurate data rather than information that's perhaps not ratified till after the end of the financial year. So these decisions we can make, it also gives us opportunity to help with these decisions, so we can review the data as you go along, consider things like pension contributions, staff bonuses, anything like that where we can give the advice, and also we can make proper tax planning then based on accurate data in the tax year rather than historical data that may be several months out of date by the time we get it. Yeah, so like I said, the main thing is not to panic. We're running this webinar purely to give advice. So we're from our end, we're quite happy that we've got everything in place, we've got systems in place ready to go. We've got clients who have already got using systems where they're already compliant. So yeah, so we're pushing things out. More than happy to keep people up to date with training. So we're giving away the software free of charge for clients to use. So we'll sit down with you, show you what you need to do, how to use it. It's a big opportunity. So most of the software you can link direct to your bank. So it means that you know exactly where you are in terms of cash flow, in terms of debtors. So yeah, plenty of opportunities to move things on. The clients where we do the bookkeeping for you, so I know we've got some clients online who we already do your bookkeeping. We already use Making Tax Digital compliant software, so in your case, then you really won't notice any changes at all. It will be exactly as you are. We'll continue as it is. We'll continue to make the submissions, but yes, so the software we're using to do your bookkeeping is already compliant. Yeah, so what we really do is just encourage people to sort of speak to us, go through the software. We can help you with the software, get things set up, so make things in place ahead of a year end. But we can always go backwards and just move things forward, so that you've got plenty of time to practice, make mistakes. We're here to help you as you go along. Yeah, the other thing is obviously we're continuing to monitor the market in terms of software providers. So if there's a better bit of software that comes out, we'll mention this to you. So there's something that's not due to come out till next April, so there's still plenty of new software coming to the market. Things like TaxCalc are bringing out a cash broker at the minute, which is again just a simple in and out. So again, once we've seen this and reviewed this, if this is a better solution, then we'll pass on to you. So more of a case of today is just about giving you information about what's likely to happen, but basically say that as clients of ours, you've got nothing to worry about, we'll help you along the way, and we'll make sure you're ready so that when it becomes live for your particular tax, you're ready to go and you won't really notice any difference. So I think that's pretty much the end of most of the presentation. If anyone's got any questions, I said there's a questions box or a chat box on the right hand side. Yeah, so that's quite a good question here from Paul. So do HMRC provide any software? They're not providing any free software at all. So with things like RTI, they gave a basic RTI software. They said this time they won't do any software. They're encouraging software providers to offer a low-cost option. But like I say, we're quite happy to forward through the chat afterwards. I'll give Paul a call afterwards. We've got software we'll give you free of charge, and we'll set you up with it, give you all the training you need, and we'll help you along the way. So I'll just wait a couple more minutes for any more questions. And again, there's an opportunity afterwards as well. There's a short survey afterwards. Just 3 quick questions. If you could give it a little bit of feedback, if you wouldn't mind. There's an opportunity on there to ask any questions as well. Obviously, any questions you've got to follow up. Drop us an email or drop us a text or a WhatsApp. And just a little bit about me and the business as well. So just down there, we're sort of looking to push the latest technology. Again, to make sure our clients are ready with Making Tax Digital. Any questions, just give me a call, drop an email, and we'll follow up any questions as well after the survey. Yeah, again, one last quick question from Jane, safety issues. Yeah, so all the data is held in secure locations, all EU-based or UK-based servers. All on secure websites as well, using encryption and various things. That's one of our main considerations is where the data is held and client data safety. So yeah, we have quite a bit that all our sort of providers we use are all comply with the strictest data protection regulations. That's it in terms of questions, but I'd say any questions you've got afterwards, please just do drop us a line, give us a call, and we'll follow up with you. So thanks for listening, and if you wouldn't mind doing the survey afterwards, that'd be great. Thank you.